Welcome back, fellow value investors. In this video, I'm going to be covering a company by the name of ZIM. They do ocean freight and they carry containers as well as automobiles to their destination market. And they've had some boom years recently in 2020, 2021. They had just phenomenal profitability, phenomenal growth, and paid big dividends. More recently, shipping rates have gone down, and that has really affected ZIM's top line revenue and everything else. It's certainly affected their stock price as well. The stock is down big. I'd like to take a look at their more recent financials. The company closed their books and announced their earnings a few weeks ago. So I'm going to take those financial statements, take a look at them, revalue the company, and decide if it's a good buy, if I should just hold my shares, or if I should sell my shares in ZIM. I have a process. I'll share that with you, and I'll share my decision on whether I'm going to buy, hold, or sell with you. Please do me a favor and like my video, subscribe to my channel, and please leave a comment on ZIM. My process in evaluating ZIM is simple. First, it's all about the company. Do I want to be a part owner in ZIM? Do I think their industry is good? And do I think their management team is operating the business well? Next, balance sheet. Is the balance sheet in good shape, and is debt less than 3 times EBITDA? Next is the discount. I need a discount. I'm a value investor. I buy stocks at a discount. Based on the answers I get in those questions, I will buy, hold, or sell. ZIM has been in the shipping business for a long time, and they really know the ups and downs of this industry. They recently, over the last couple of years, have made a lot of money and really put a lot of cash on that balance sheet. What they did with that cash is they refreshed their fleet. They have 46 new vessels, and those vessels, I think, are an advantage to ZIM because they'll be able to operate those ships at a lower cost. They're more efficient from a fuel perspective, and they're probably more reliable. They need less capital going forward. So that was a really wise move on their behalf. I like the company. I think the company is strong, and I'll get into the balance sheet and I'll get into their financials in a moment. The industry is a boom and bust industry. There's no other way to put it. In good times, holy smokes, they make so much money. In bad times, it's really tough. And I think we're in a bad time, but that doesn't completely eliminate it as an investment that I'll make, especially a long-term investment. I like buying companies when they're discounted and when nobody likes them, when there's a lot of fear and there's unrealistic negative information on a company or industry. I like buying during those times. That way I could see my investment double, triple, quadruple in value over time. So I like the company. I like the industry. I think their management team is excellent. The big headwind for ZIM has been the shipping rates. Back in 2021, shipping rates were phenomenal. They were really high, and they pretty much tripled. And now they've really come down to about a third of what they were a couple of years ago. And that continues to be a headwind. A couple of things I'll note is we had economic data released today, and it was positive that, inflation's going down. Consumption's going up in the United States. The holiday season's here where, we tend to have a lot of retail activity, and retail sales are looking good. So I think from an economy here in the United States, the economy is picking up, and I believe that that is a positive for the shipping industry. We're going to need to replenish that inventory that people are going to buy. I think people are inclined to buy things, especially in the US. Looking at Asia and looking at China, China had I think a slow 2022 and 2023. And the reasons for that were COVID. The way they dealt with COVID was different than in the US. And it really slowed down their economy. And as their economy begins to pick up, I believe that's going to put more demand on ocean freight as well. So we'll see how things go, but I'm inclined to believe that shipping rates will go up. They're not going to go up to where they were a couple of years ago. That'd be just unrealistic. But I think they'll go up a moderate amount, and that will certainly help ZIM. ZIM announced their earnings for the third quarter of 2023, and I'm going to take a look at their financials. First, revenue is down about 61% if you compare the quarter versus the previous quarter. And that's expected. It's all about the shipping rates. They still have positive EBITDA, which is very good, but it's down significantly. Again, it's all about those rates. They continue to generate cash flow from their operations, which is very good. If a company's producing cash, that means the business is viable. Viable being they're going to be okay. If you produce cash, you're going to use that cash to pay your employees, take care of the business, grow the business, and so forth. The one thing I'll point out is that the company 5 years ago was about a $3.2 billion company. It grew steadily, and then it really just took off in 2021, 2022. The company is still going to be larger than they were in 2019. So it shows the company organically is growing. And I mentioned that they bought 46 new vessels, which is really encouraging. So overall, I understand the shipping rates really affect the top line. They affect their financials substantially. I still think this is a solid business, and I think they're operating the business well. ZIM had really boom years in 2021 and 2022. They collected a lot of cash. Good for them. They took that cash and they invested it in the business. They built 46 new ships and put them into their fleet. Those 46 new ships are more efficient, lower cost. That's going to help them reduce their cost and make them more competitive. That's a really smart move on their management's part. Looking further into their financials, when we look at volumes that they carried, it's pretty close to where they were last year. So it's not a volume difference that we're seeing in their financials. It's really, again, back to the shipping rates. The shipping rates are actually down significantly, about 66% in the quarter and 66% year to date. Revenues are down substantially. You could see that if we compare this year compared to last year, the revenue is down. Free cash flow continues to be positive. That's incredibly important for me. I think my valuation is going to be strictly on free cash flow. So if they have free cash flow, they're a consideration for my investment, and they do produce free cash flow, which is excellent. When we look at their net ratio, which is a comparison of their debt versus all their cash and investments, it's 0.9, which is pretty strong. And if I look at the balance sheet based on I don't want more than 3 times EBITDA net debt, it's at 1.8. So they have roughly 2 years of EBITDA worth of net debt. I'm taking the lowest guidance that they've given for this year. And I believe that the economy is going to get better for freight in 2024 and 2025. And as the rates go up, EBITDA will also go up. So I think the balance sheet, it's in good health, and I think it's going to be in good health for the next few years. The company is guiding that this year, their EBITDA is going to be between 900 million and 1.1 billion. They are going to have a net loss if we follow GAAP. Freight rates will continue at the weak level that they're at. We have seen a slight rise, but we'll see where they end up for 2024. I believe that ZIM is heavily discounted. It's discounted by 295%. That's a huge, huge discount. And I think a big part of that is that just when rates go down, people leave this industry and they flock out of this industry. But let's take a look at free cash flows and then value the company based on free cash flows. So even though shipping rates are down, the company still is going to produce $785 million of free cash flow or more. I'm just taking the first 3 quarters of this year, and I'm not even counting the fourth quarter. It's going to be better than that. I'm not even going to grow free cash flows. I'm going to reduce cash flows by 10%, making it incredibly conservative. And I'm only going to grow perpetual growth, and the terminal value is going to grow at 2%. So the terminal value, all free cash flows beyond year 4, will be 5.5 billion. I'm going to take a very high weighted average cost of capital of 14%, even though they have a good balance sheet. And their cash flows from a net present value perspective are worth $4.9 billion. I'm going to add the cash and cash equivalents and take away all debt the company has to get to an equity value of 3.2 billion. That's what the company is worth based on the cash flows they're going to produce and so forth. But the market cap is really low. It's $833 million of market cap. So that's where we get this huge discount. So really the question is, if ZIM is going to be a viable business, if they're going to be around in 10 years, this is a really good opportunity for me. So that's the way I view it. And it may be a long-term investment, but it's one that I'm interested in. Looking at where the stock has been over the last 12 months, it's not a pretty picture. It's gone down quite drastically from trading in the $22 price range down to less than $7 per share. The company is being shorted by a lot of investors, and 22.99% of shares are shorted. As mentioned, I think the company is severely undervalued. I believe the company is a viable company, and over time it will rise. I believe, and this is my money I'm investing. I'm not recommending you buy ZIM. I'm just telling you what I'm going to do. And I think that the company over time will go up. The stock is down almost 60%. So that presents just a really good opportunity for a value investor. This is probably going to be a long-term hold. Things aren't going to happen quickly. There is a chance of a short squeeze if this industry catches good news, like shipping rates go up and they go up substantially. You could see this stock really rally, and the shorts are going to have to buy shares. So they're going to have to cover their shorts, and this stock could really rally. But I'm not counting on that. I'm expecting that it'll be a couple of years of holding this stock and waiting for the economy to change within the shipping industry. So what should I do with my decision on ZIM? Should I buy, hold, or sell shares on ZIM? So first, I think the company is really good. I think the business is solid. We're going to need ocean freight, period. We have a global economy. We need to get goods from market to market, and it's just not going away. This business is operated really well. I really like their management team. I like the things they're doing. Their balance sheet is strong. Their balance sheet, these guys could operate the way they've been operating for the next 10 years. So the balance sheet's strong, well below the 3x EBITDA. The discount is really good. So I'm going to keep buying shares of ZIM, and I'm going to buy shares, and I'm going to average my buy. ZIM will never be a huge position for me. And the reason for it is just too risky. My biggest positions, Meta, Chevron, Alphabet. Those are blue chips, huge caps, done really well with all three. And that's where most of my capital goes. But I have a really good portfolio of small caps and risky stocks. And some of those have just really rewarded me. They've become multi-baggers, and I've made a lot of money. And this one could be the next multi-bagger, but it could also be the next big loser. So I do not put a lot of money in the high risk investments I make, but I'm willing to make the investment. Hey, thank you for watching my video on ZIM. I hope you found it interesting, and I'd love to hear your comments on the company and hear what you're doing with the stock. Do me a big favor and like my video and subscribe to my channel. Thanks again for watching, and good luck investing.